My name is Garth McKenzie. I'm a technical analyst and an ETF strategist with traderscorner.co.za. Today, I'm taking a look at the large US indices and ordering them from strongest to weakest and having a look at where they each stand in terms of their technical setups. So we start looking at the Nasdaq 100 index. And as you can see here, this index is actually not far away from retesting its prior highs that we saw in February, just before the market crash in March. It's a very strong chart setup. It's above all the moving averages. You can see there your 200-day and your 50-day moving averages are pointing upwards, and the 15-period exponential moving average is providing support at the lower levels. So this looks very strong. In the top pane of this chart, we've got the performance of the Nasdaq 100 versus the S&P 500. And you'll see that in all of the charts that I show here today, we're comparing against the S&P 500 as the standard index to measure against, if you will. And that upward sloping panel in the top panel there indicates that the Nasdaq 100 is very much outperforming the S&P 500 as things go, and that's been a trend that we've seen for quite some time, even before the market crash. If we move on to the next slide, this is now the S&P 500 index itself. It's been a sideways range-bound market for the last couple of weeks between about 2,800 and around about 2,950. It's now looking as if it's breaking out. In fact, the futures now are pushing out above 3,000 as I speak. So it looks as if a breakout above that sideways range is now coming, and that suggests that the S&P 500 probably goes up, tags the 200-day moving average, and possibly even moves up above the 200-day moving average. There is a gap in the chart from early March, which sits at around about 3050, somewhere there. So we'd keep an eye on that level. But technically speaking, a break above 2940 opens a target up to 3080, actually. Then we move on to the slight underperformers in terms of the bigger indices, and this is the Dow Jones Industrial Average. And what's evident here is the same sort of pattern as what we've seen on the S&P 500. It's just not quite as strong on a relative basis. You can see here that the Dow has been trading a sideways range between 23,000 and 24,500 over the last few weeks. As I sit here right now, it looks as if the market is poised to punch up above the top of that range, and that'll probably set the stage for it to go up and test its 200-day moving average, which comes in at around about 26,000. In the top panel of this graph, you can see the performance of the Dow Jones relative to the S&P 500, and you can see a steady downward slope in that. What that implies is that the Dow Jones is underperforming the S&P 500. Now, my final chart here is a look at the Russell 2000, and we're doing this via the iShares Russell 2000 ETF. The share code there is IWM. And much like the Dow Jones, it's also a little bit weaker than the other indices that I'd spoken about earlier in the show. You can see it's been sideways range bound over the last couple of weeks, but once again, it looks as if it is poised to punch up above the top of the range now in the week ahead. And that probably sets the stage for the Russell 2000 to push up to its 200-day moving average. In this case, looking at this ETF, we'd be looking for a break above $135 a share to target $145, which is where the 200-day moving average comes in. Again, at the top panel there, you can see the relative performance of this ETF versus the S&P 500, and it does show some level of underperformance. So from a relative strength perspective, the real place you want to be at the moment is actually in the Nasdaq and to some extent the S&P 500. The Dow Jones and the Russell 2000 are bringing up the rear, as it were, and they're underperforming. What's the big key there? Well, tech stocks. Big tech stocks are heavily weighted in the Nasdaq, and they're also quite heavily weighted into the S&P 500 now as well. Whereas your Russell 2000 and your Dow Jones Industrial Average are not heavily weighted towards the tech sector, and hence you're seeing the underperformance there. So if one wanted to pair these against each other, I suppose one could be looking to be long of the Nasdaq and short of the Russell 2000 or short of the Dow Jones against it. That's all I have for you this week. I'll be back again next week with some more market analysis and possibly a look at some ETFs.